A partnership usually must file Form 1065 every year. The only real no-file situation is when it has zero income and zero deductions or credits. On the EA exam, they'll try to trick you with no activity facts. If there's any deductible expense, even small, you're back to filing. Remember, Form 1065 is an information return. The tax flows to the partners. The due date is the 15th day of the third month after the tax year ends. For a calendar year partnership, that's March 15th. Fiscal year partnerships count forward 3 months from year end. EA exam tip: don't confuse this with individual returns. Partnerships are earlier because partners need K-1s to finish their own returns. Need more time? File Form 7004 by the original due date. That gives an automatic 6-month extension to file, pushing a calendar year partnership to September 15th. But here's the exam trap. An extension extends filing time, not decision time. Some partnership choices and agreement changes must be done by the unextended due date, even if you extend. E-filing got stricter starting in 2024. A partnership must e-file Form 1065 and related schedules if it files 10 or more returns of any type during the year. That includes W-2s and information returns, not just income tax forms. If they paper file when they should e-file, penalties can apply unless they truly couldn't e-file, like a rejected transmission. Now the flow-through. Form 1065 reports the partnership's totals, but each partner gets a Schedule K-1 showing their distributive share. Partners generally aren't employees, so no W-2 for their partner earnings. The partner reports K-1 items on their individual return, commonly through Schedule E. On the EA exam, watch for separately stated items like charitable contributions. Those still pass through to the partner. Schedules K2 and K3 expand foreign-related reporting beyond the old K1 foreign section. The default is complete them unless an exception applies. The big one to know is the domestic filing exception. If the partnership has only minimal foreign activity and meets the notice requirements to partners, it may be able to skip filing K2 and K3 unless a partner requests K3. Ethan is the sole member of Harbor Bullion, LLC, and he sells 15 gold coins for $13,200. The customer pays $6,200 in cash and $7,000 with a cashier's check. What reporting obligation does Ethan have for this transaction? The options include no special reporting, filing Form 8300 within 15 days, reporting on Schedule D, or filing an FBAR. Think about it. The best answer is that Ethan must file Form 8300 within 15 days. A trade or business that receives more than $10,000 in cash in one transaction or related transactions has to report it. The tempting wrong answer is no other reporting, because it feels like a normal sale. But for Form 8300, certain monetary instruments like cashier's checks can be treated as cash, so the total crosses $10,000. What is the deadline to file Form 5500, the annual return for an employee benefit plan? The choices are different, month after plan year end rules, including 15th day of the 7th month, 15th day of the 4th month, 15th day of the 5th month, and the last day of the 7th month. Think about it. The correct answer is the last day of the 7th month after the end of the plan year. For a calendar year plan, that's July 31st. The tempting wrong answer is the 15th day of the 7th month, because that sounds like the usual business return pattern, but Form 5500 uses the last day of that 7th month.